Ladies and gentlemen, good day and welcome to the Praj Industries Limited Q4 and FY24 earnings conference call. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and a very warm welcome to you all. Sorry, it's 12 o'clock, so good afternoon, everyone. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Praj Industries Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the fourth quarter and financial year ended 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. Shishir Joshipura, CEO and Managing Director, and Mr. Sachin Raole, CFO and Director of Resources. Without any further delay, I request Mr. Shishir Joshipura to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good day, everyone. I welcome you to Praj Industries earnings call for Q4 and FY24. First, all of you had the opportunity to go through our results for the quarter ended 31st March 2024. I would like to start today with two exciting developments in the quarter. First, Praj is ranked global number 1 in hottest top 50 companies in advanced bioeconomy by the US-based Biofuel Digest. This makes Praj the first Asian Indian company to bag this honor. From a global rank of 34 in 2018 to a global rank number 8 in 2019 and finally a global rank number 1 in 24 is being a very eventful and exciting journey. Secondly, we are very, very proud to announce successful commissioning of commercial scale CBG plants based on fresh mud and rice straw, as also achieving benchmark results for yield. These plants deploy Praj's state-of-the-art proprietary PM-STAD and BM-SOL biosolutions to achieve reliable performance. With this, Praj now has proven commercial scale CBG projects operating on 3 key feedstocks, namely spent wash, pressed mud, and rice straw. This establishes Praj's Rengas technology as a definitive solution for complex agriculture feedstocks. Now coming to the business performance. Our performance for the quarter and whole year reflects the business development across different dimensions of our portfolio and our ability to create, deliver, and capture value to an increasing base of diverse customers. We are on a path to transform our business with increasing focus on emerging segments of CPG, SAF, and ETCA in near to mid-term future, while expanding the share of international business in the overall pie. Our domestic bioenergy business saw the quarter continuing to see development of starch-based ethanol plants in the country, with over 90% of our domestic order book coming from starch-based plants. The mandated realignment of sugarcane-based feedstock and product mix slowed down order execution and finalization for ethanol projects based on sugary feedstocks. We are in discussion with several customers on converting their existing single feedstock plants to multi-feedstock. With favorable revised estimates on sugar production in the country, we are confident that the delayed project will soon get back on the track. On international front, as you all know, Brazil is the sugar and the ethanol capital of the world, and so far the ethanol production in the country has been from sugar feedstock, and of late it has started to produce ethanol from starchy feedstocks. Brazil is now moving rapidly on ethanol production based on starchy feedstock. I am happy to share that we have successfully handed over our first grain-based ethanol project in Brazil. We have already signed up for one more contract for grain to ethanol plant with DEA, a global renewable energy company in Brazil. The engineering activity for this plant will commence in this quarter, followed by construction activities in next quarter. I am happy to share that a French group has awarded us a contract to set up a 60 KLPD greenfield DNA plant in Ivory Coast, Africa. This is the second project from the same group. We are in the process of completing the first project that is being set up in Congo. The low carbon ethanol opportunity in this case is expected to get momentum post notification of 45Z under IRA Act. We have initiated dialogue with several countries who have become part of Global Biofuel Alliance. On the services business that saw healthy 2x growth in FY24, we are eyeing significant growth in both domestic as well as international markets in FY25. Biogenic CO2 capture is increasingly gaining traction at the back of sequestration activities picking up, and we have started to provide solutions for capture of biogenic CO2. Our solution for enhancing sugar yield and quality is gaining traction in the Brazil market. On 2G front, IOCL plant recommissioning is underway. I am happy to share the plant has produced over 1 million liters of ethanol till date. Being first of its kind plant, there are unique situations that need resolutions across the ecosystem and the project. We are working very closely with IOCL team to resolve these and ramp up production in gradual manner. As for CBG, I have already shared the most important development. We are further working on establishing foolproof solutions for other feedstocks. The entire pipeline for CBG plants is developing in a healthy way, and we expect it to translate into firm business as we progress in the year. Our modularized solutions offering is finding strong traction in international market and has witnessed nearly 2x growth in order book over the previous year. Praj is chosen to build state-of-the-art modules for one of the largest blue hydrogen projects in Europe. We have also booked and executed engineering projects for modularization of ATJ project. ATJ is the alcohol-to-jet pathway for SAF in the United States. We have commenced commercial production for our new GenX facility in Mangalore in February. All customer audits held for approval of this facility are successfully completed. Our PHS business has delivered strong growth over last year with healthy order book and has seen increasing traction for our high-capacity fermenter offerings. We completed 3 state-of-the-art blood plasma projects in this fiscal year, and with one major customer achieving 100% capacity for the plant plasma products. Zero liquid discharge, our motorized solutions are finding increasing acceptance from our customers. We are leveraging our core competence in industrial biotechnology and microbiology to develop specialized microbes for processing difficult to treat industrial effluent. The brewery and beverages business inquiry is now building up on the back of normalcy in the market demand. We are expecting capex investment in the coming financial year. Overall, the business outlook continues to be positive for our business. With this, I will now hand over to Sachin for his comments on the financial performance.
Thank you, Shishir. The consolidated income from operations stood at 10,185 million in quarter 4 of 24 as compared to 10,039 million in quarter 4 of the last year. PBT for the quarter stood at 1,230 million as compared to 1,128 million in the corresponding period last year. Profit after tax at 91.96 crores as compared to 88 crores of last year's quarter 4. For the full year ended March 31, 2024, income from operations stood at 34,662 million as against 35,280 million. PBT stood at 3,774 million in FY24 as against 3,187 million. PAT for FY24 came in at 2,833 million as against 2,398 million in FY23. Export revenues accounted for 20% for FY24. Of the total revenue, 74% is from bioenergy, 18% is from engineering, and 8% is from PHS business. The order intake during the quarter was 9,240 million, with 61% from domestic market. Of the total order intake, 65% came from bioenergy, 30% from engineering, and balance 5% from PHS business. The order backlog as of March 2024 is at 38,550 million, comprising 71% of domestic order, with 76% from bioenergy, 19% from engineering, and balance 5% from PHS business. Cash in hand as on March 31st of 24 is 700 million. The Board of Directors proposed the final dividend of rupees 3 per equity share at the rate of 300% of the face value of rupees 2 per equity share. final dividend, 300% at the rate of rupees 6 per share of the face value of rupees 2 per equity share for the financial year ended 31st March 2024, which is subject to the approval of shareholders at the forthcoming annual general meeting. With this, I will conclude my remarks. Thank you all for joining. We would now be happy to discuss any questions, comments, or suggestions you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from ICICI Securities Limited. Please go ahead.
All right, sir. Thanks for the opportunity. Congratulations on a very good quarter and a good fiscal. But my first question is on the order inflow. While we have done excellently on the revenue and margin front,
Mohit, we are not able to hear you very clearly.
Can you hear me now, sir? Is it better now?
Yeah, it's sort of, up and down voice level.
Let me be slightly loud, sir. Is it better now?
Yes.
Yes, sir. So my first question is on the order inflow. So you've done very well on the revenue and margin front, but the order inflow has been subdued, especially if you look at last couple of, especially H2. We haven't seen the bump up from ethanol or any other project. How do you think about the order inflow for FY25?
So thank you, Mohit. As you have pointed out and correctly surmised, the government's notification around alternate use of feedstocks, which, as you are aware, that there was a realignment required for the feedstocks from on the sugary side, especially, where the notification came which said that syrup and molasses feed cannot be used for production of ethanol. And that meant that there was a clear halt of sorts side as well as on the order booking side from this particular sector. And this is a very important part of our overall customer segmentation. So from that perspective, that was one. Two, as you have seen, that we have also built different business lines over the period of time, because EBP20 is a definite positive wind in our sales. But that has a definitive benchmark, and we need to then see how do we move forward from there. So therefore, a lot of effort has gone into creating alternative business avenues. And as you also saw, the starchy-based feedstock has started to pick up in a big way, with nearly 90% order book coming from starchy feedstock. We have also seen CBG build very positively in the last half of the year. We are seeing ETCA opportunity building in a very positive and constructive way, as I mentioned in my opening remarks as well. So these are the vectors which are now also started to contribute in a very, very positive way. And that is why, although the sugary part of the business came to a virtual halt, it still did not impact the overall order book, and we were still able to meet nearly the same numbers in last two quarters of the year.
If I understood it correctly, sir, you think FY25 will be far better compared to FY24. Is it right to say so?
Sorry, Mohit, we can't hear you.
Because how do you think about FY25? I understood, sir, your issue with the order inflow for FY24. How do you think about FY25 order inflow?
Exactly. So, as I said, there is strong traction on CBG. There is strong traction on modularization. We also expect that at the back of a strong sugar season that the country has witnessed, we will see restoration of feedstock permission for using sugary feedstock for ethanol production. So we see that the canvas will start to change. It's already been changed in a couple of businesses and in the sugary feedstock side as well as we move forward to the year. So that will augur positively for our business as we move through the year.
My second question is on the execution in the current CBG order book. How is the traction? And also the related question is that we are getting a number of CBG tenders are out from larger industrial players. Do you expect a number of?
So right now, if you really look at it, there are 2 or 3 vectors I was mentioning to you. CBG in India, DTCA on the international business, especially I mentioned about the blue hydrogen project, and that's just an indicator. We have talked about Brazil as a very important market for us, where we clearly begin to see build-up of a very good traction. The LCE opportunity in the United States. So we are beginning to see what we have been talking about as an opportunity to be developed, coming now, potential getting translated to order book. We believe that this will continue to be so as we go through the year.
Thank you, sir. Thank you for answering my question, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Sailesh Lakhani from Centrum Broking. Please go ahead.
Good afternoon, everyone. Congratulations, sir, for a good performance given the challenging environment, and thanks for the opportunity. Sir, I had a few questions. First, on the engineering side, so when I see the order inflow for FY24, we have doubled. But on the revenue booking front, it has been tepid. So can you give some color what is happening over there?
So all I can say is that there is a cycle that we need to go through, the order execution cycle. So what you see now getting displayed as order book will obviously start translating itself to revenue as we go through the year, right?
Okay. So just to put it other way around, in my modeling, I'm getting a huge bump up in FY24 for engineering division, say more than a 50-60%, given the tenure of the order book. So is it a fair assumption, sir?
Sorry, Shailesh, can you please repeat your question? There was a disturbance.
Yeah. So I am saying, so just to put it the other way around, given the order book traction what we have seen in FY24, engineering division is expected to do a very good performance in FY25, say more than 50-60% in terms of revenue booking. Is it a fair assumption, sir?
Yes, fair assumption.
Okay.
Thanks, sir. Coming from ETCA, that's right. You'll see a major change happening on the order booking because our new facility, as Shishir was mentioning, is already approved by the customer. We'll first see build-up of OB happening in that engineering segment in the next 2 quarters, and then the revenue will start flowing in because the facility is now up and running.
Yeah. Only thing is that given the way the order books will move, so as Sachin mentioned, it will be an order book that will get built up over the next 6 months, and then the execution cycle will take place.
Okay. Fair enough. Sir, another point is on gross margins. We have done exceedingly well in FY24 on gross margins term. So, and coupled with that, this is, I think, after nearly 5 years, we are having an order backlog where nearly 30% is going to come from international market. So, how do we see the gross margins shaping in FY25 and 26?
2, 3 things. One, the domestic and international ratio, what we always said that is going to change over a period of time. It has already started showing first to some extent in revenue going forward in the order book. That is definitely going to help us on building up our margin. The other elements which actually created some kind of issue, mainly on the commodity prices in the last couple of years, has also smoothened. So we believe that that is also going to help us on the gross margin going forward. Our first target was to achieve the two digit kind of a margin on the EBITDA side, on the build-up of the higher gross margin, which has already started showing the results in last 2 quarters. We think that this momentum is going to continue. With what that number is going to be, unfortunately, I will not be able to give that kind of a number as a guidance. But yes, our efforts on building up on the improvement on gross margin on the EBITDA is anyway going to continue.
That's very helpful. So if I can squeeze one more question. So wanted to understand on the order inflow mix going ahead. There has been a drop in the bioenergy space, right? And for obvious reasons beyond our control. So how do we see shaping, say, in FY25-26 on order inflow mix?
No, so bioenergy, you can say bioenergy. Then we will have to see it from a different perspective because there is the molecule is changing, number one. Number two, the segments may change. in terms of geographically, whether it's India or outside India. I mentioned Brazil, I mentioned United States. We also mentioned 2 quick orders from African region, what's going to happen with the WBA. So maybe the construction of the bioenergy order book will change because of changing molecules, because of changing geography, changing application. But overall, we expect this to grow. We are not expecting it to stay status quo or shrink, not at all. We are actually expecting it to grow. Also, we expect the engineering order business to grow, as we already answered to you. So we expect both our major business segments to actually continue to grow from where they are, maybe with a different elemental level, different construction, but overall the book will continue to grow.
And Shailesh, just to add, we had mentioned that our 2030 target is 3 times of revenue. And in that build-up of revenue, all the businesses are going to equally contribute. So even in the bioenergy space, if you look at, maybe within bioenergy, we will see some kind of shift happening between the CBG and SS and biofuel. But all these things are going to contribute in the overall picture of our 3 times of revenue going forward.
That's really helpful. Thanks a lot, sir, and best of luck, sir.
Thank you.
Thank you. The next question is from the line of Manish Goyal from ThinkWise Wealth Managers LLP. Please go ahead.
Yeah, thank you so much, sir. Please bear with me. I have a few questions. First, on the services business, if you can probably provide more insights on different kind of services we offer and what are the revenue potentials. Probably one is performance enhancers, which is probably like a consumable, and then you had earlier spoke about opportunities in US for low carbon intensity refurbishments of plants. So that is first question on services, and how much does it currently contributes in terms of overall revenue? That was one. And second, sir, if you can also give us a perspective, like you just mentioned on gross margin. So one is definitely you mentioned international revenue share improving, but any other change in revenue mix with say engineering share improving or high purity improving? So does that also supports your gross margins improvement? That was second question. Third question is on any update on US front in terms of Inflation Reduction Act incentives under IRS, if you can provide that. Maybe if you allow, I'll probably have a couple of more later on. Thank you.
I think all the questions you have asked in one break. So let's first try to answer those questions and then we will see.
Thank you.
Yeah. So, okay. So on the IRA front, the 45Z notification is still awaited. So we do not have that. But as I mentioned to you, we are already, some of the customers are already beginning to move in the direction, because the fact remains that if SAF has to come through an ATJ pathway, and that is the most considered to be the most viable pathway right now outside HEFA, the low carbon ethanol has to become a reality, and we expect that will happen. So the first project is already under construction now by us. So we'll see how that develops, and we are expecting 45G to be clarified soon. In terms of margin that you said that, what's going to be the order mix or mix of businesses, let me tell you that we are very clear in our strategy, in what we see in front of us, also future unfolding. Each and every one of our businesses will grow from here onwards. So we're not expecting any business to shrink. There may be slightly different construction at the elemental level, but other than that, we do not expect any other change. And all of these are favorable, if I can use that word, are on the margin side of the story. So that's what we expect will happen as we go forward. Each and every business of ours will grow. Some of the new stuff we already talked about, CBG, ETCA, and in time to come, SAF will also start to grow very, very constructively as we move forward through the years.
Sure, sir. And so, we have seen a very strong traction in international order inflows in the current year, and that is across the segments. So, how is the pipeline, and do we see this momentum continuing going forward? And sir, I missed on my first question on the services business. Thank you.
Yeah. So So you asking me question, then we don't.
Okay, so sorry. So maybe you can answer on services. I'll come back on that.
The services, so the low carbon ethanol opportunity, as I said, that you mentioned, it's not a service offering. It's a full-fledged technology offering from our end. So that's not part of the services, but the performance enhancer I mentioned about a new traction we are finding in one of the products that we introduced on the sugar side of the industry, not ethanol. It actually helps into sugar qualities and color, etc. So that's finding very good traction. So, and services, then other stuff, through utilization what we offer to our customers for managing their plants remotely, for part services, O&M services. So these are all different package of services that we offer to our customers. They obviously need set of enzymes and performance enhancers and leads, etc. So that gets sort of bundled together and moves forward. So services is a different construction of business that moves forward. Okay. Anything else that I left out?
No. So how much, sir? Like what could be the current contribution of services roughly, and how do you see it growing, sir?
1%. So the contribution from services business currently is in the range of 4 to 5%, and we expect that pie to go up going forward because on a continuous basis we are increasing our offering under services umbrella. Just to give an example, today when the CBT plants are coming up now, for the maintenance or for the maintaining the quality of the feedstock, there is a biological solution which we are providing under our services umbrella. So that is supposedly to also contribute in a big way. We have introduced providing our solutions in the Brazilian market in a big way now. It has also started picking up now. So the services pie supposedly to go up going forward.
There's another important element to the service business that I mentioned is about capture of biogenic CO2. And that's going to find, that's increasingly finding a big traction because CO2 capture is becoming a significant activity for several of our customers and organizations across the world. And that's where we are beginning to offer our services and solutions for capturing of the CO2 as it is generated. So that will become, that's also part of our services portfolio.
And the best part is our captive customer base is also increasing.
Sure.
Which is also going to contribute in a big way
and
for all services.
All fermentation processes will create biogenic CO2. So that becomes almost a captive customer for us.
Right, sir. I'll just squeeze in one more question on high purity, sir. Again, this segment has seen a very strong order inflow as well as execution front. So are we also started getting inquiries from semiconductor and electronic plants which are being set up in India? And can it be a large opportunity for us?
If the semiconductor chip manufacturing needs water, which is of the same level of quality and purity that is required for pharma application, and so from that perspective, from a capability perspective, we already have the capability. As and when the projects are announced, and these are large outlay projects, obviously this will take some time to get off the ground, but as and when they come up, we'll surely be hearing about it and we'll speak to you. As of today, we do not see any projects actually going to a stage of ordering out equipment and discussing and all that. So I think we are still a little away from that.
Okay. I'll come back in the queue. Thank you so much for all that.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participant. I repeat, please limit your questions to 2 per participant. Thank you. The next question is from the line of Sagar Kapadia from Prabhudas Lilladher. Please go ahead.
First of all, congratulations to the Praj team that even in such a tough time, you have come out with an excellent set of numbers as well as the excellent order intake.
Thank you, Sagar. Go ahead, your voice is cracking in between. Huh?
Okay, I'll speak a little bit louder. Sir, I just wanted to split. In the bioenergy, you have said there's an order intake in the fourth quarter worth around 600 crores. So what is the split between the CBG and the ethanol orders?
So, Sagar, we have not yet started splitting our segments into what I can say mini segments right now. But yes, there is a order book built up happening on the CBG side and on the ethanol starch feedstock, which Shishir had mentioned earlier. But we have not started giving this further.
Last quarter, you had given that information. You had received certain, 4 orders from CBG about 400 or 300 crore. You had given that information in the conference call.
We had mentioned because that was the beginning of CBG order picking up, but we have not yet started giving the split of all the verticals.
Okay, so you are still not giving that split between
That's
the
right. That's right.
But can you give me a split broadly, like out of this 600 crore, how much is for the exports?
That's possible. Just give me a minute. If you are having a second question, you can put that second question and I will give you a split of 600.
No, I don't have any other question. This is the one only. Okay, well, how much is contributed by that?
Okay, so out of that, almost 150 crores will be exports and 450 crores will be domestic.
Okay, sir. Thank you.
Thank you.
Yeah.
Thank you. The next question is from the line of Nihal Shah from Prudent Broking. Please go ahead.
Hello, am I audible?
Hello.
Am I audible?
Hello. Hello.
Hello. Hello.
You lost him?
Hello.
Yes, sir, you are audible.
Yes. Thank you. Thank you for the opportunity. So my question was on the engineering front, as we are seeing a lot of traction there in the terms of order book, and in this quarter our revenues also 20% of them came from the engineering segment. So how do we see our margins going ahead?
Sir, we have lost the management line connection. Please stay connected while we reconnect them. Thank you.
Okay.
Hello. Ladies and gentlemen, thank you for patiently holding. We have the management line back on call. Nihal, please continue with your question.
Yeah, so congratulations for the great set of numbers. So my question was on the line of engineering segment, as we are seeing good traction coming from there. About 20% of our revenues also came from that segment, and order book also looks strong. So going ahead, how do we see our margins improving from around 11% to 13-15% in the next 2 to 3 years?
Sorry, I will not be able to exactly give you how the percentages are going to move. As I mentioned in my earlier comment, that our endeavor is to, first endeavor was to get into double-digit margin and then build on that margin. We have to keep in mind a couple of things, because we are talking about expanding the business offering in the form of, let's say, CBG is supposedly to catch up now, services business is supposed to go up, SS business is start kicking in. But at the same time, there is a lot which is happening on the developmental side also, for preparing ourselves for the next wave of growth. So we are investing in R&D in a big way. Our PLA plant is supposedly to start its operation from this year. The second quarter, we will start the operation of our PLA. We will get into more R&D related activity. For CBG, we are working on multiple feedstock testing in our demo plant. So there is a lot which is happening on the developmental side also. And whatever happens in our research side, it gets actually debited to P&L. So we don't capitalize our research expenses. So depending on how these activities are going to get built up, the margins are supposedly to move. But as I said, our efforts are to build upon what already has been achieved in the margin side.
Okay, and another question was on the front of the sustainable aviation fuel. So are we seeing orders starting to come up from that segment? Because I guess there was a 1% target that the government had set till 2025. So how is that segment moving?
So Nihal, SAF is what we did, what we demonstrated last year, that it's possible to make SAF in India on local feedstock. That was the proof. There is no legislation in place as yet. The only agreement that is in place globally comes into being. It makes mandatory for airlines to blend 1% starting 1st of January 2027. So these are still early days for SAF. But as we go through the year, maybe towards the end of the year, we'll start to see some announcements around SAF capacities being set up, etc. So we'll see how that develops in terms of what mandates come, what's the new policy that comes in for the domestic aircraft. International part of the business, as I said, is already in 1st January 27.
Okay. Okay, and just follow up on the previous question, like is the execution cycle on the engineering front slower than that in the bioenergy front, or it takes around the same time?
No, actually in some cases it is even longer than the bioenergy side, depending on the complexity of the project.
Okay, thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Vikram Vilas Suryavanshi from Phillip Capital India Private Limited. Please go ahead.
Yeah, good afternoon, sir, and good numbers given the challenging environment. Initially, I just missed few comments, so pardon me in case I'm repeating this question. In case of a bioplastic or demo plant will be ready, so how is there any inquiry pipeline or how you plan to monetize it? That is my first question. And second, on Brazil opportunity, you highlighted to some extent already, but would it be possible to give what will be the scope of our services there and any business development strategy over Brazil? And I guess it will be mostly on maize side. So if you can answer these two questions, that's it.
So let me take the second question first, Vikram. Thank you. So in Brazil, as we have known, Brazil is obviously known for sugar-based ethanol production, but as the country is moving to enhance the use of ethanol, they are also finding very similar challenges to what we did, that sugarcane is not present in all the part of the country, so they need to transport ethanol long distance, which is not a good thing, not a positive thing from an environmental perspective, etc. So they have also started to look for alternative feedstock, and starchy feedstock is a natural candidate in line for that. That's number one. So they are beginning to look at alternative feedstocks in terms of what kind of starchy feedstocks in different parts of Brazil that can be put to use. We commissioned our first project based on corn. The second project that I mentioned to you about is based on wheat. So different feedstocks in different parts of the country that will be put to use. And we from our inquiry pipeline, from the dialogues that we are having with customers, we clearly see this to be the new growth area of, as far as Brazil is concerned, in terms of capacity that will come up as we traverse through the year. There are already significant amount of activity increase in that space as far as Brazil is concerned. On the PLA, we obviously need to first, it is a demonstration plant that we are now building, and it will start commissioning in this quarter. And once that is commissioned and the process is established, obviously we have to invite the interested customers to the plant for them to witness the process and its efficacy, and then only we'll be able to build it. So we are not building any PLA-based revenue or book in this year's estimate of ours, but as we probably travel through the future, we will be able to see that build.
Got it. Just a related extension of what you have said about if you look at the Brazil is very competitive on sugar side. So is there any government support for this grain-based or starch-based feedback which is picking up now? Because we have seen very strong growth in grain side of story in terms of production for Brazil also. So just in case of competitiveness, or if you can just share your experience from that one.
So what we are seeing is 2 or 3 things, Vikram. One, that our technology is absolutely able to deliver a benchmark performance on different dimensions that are important to a owner of a ethanol facility based on starchy feedstock. That's number one. 2, we have a very, very extensive experience globally on, so for example, I mentioned about the wheat project. We built a wheat-based project as the largest project in UK almost a decade ago. So that when they came and saw that we have that kind of experience available on our side, they obviously were impressed that we've been running that size and that kind in a very advanced nation for a very long period of time. So that comes in handy as well. There are incentives that the government is making available in Brazil at local level, and I'm sure that, but that's not to us, that's more to the producers or the promoters of the project. So, in terms of what necessary incentives are required. State governments are getting very active because they clearly see some of the states in Brazil see this as a clear activity to drive employment and create more opportunities for the local population. So obviously that's another one that's going up, and we are seeing positive traction develop all across.
Got it, sir. Thank you very much.
Thank you.
Thank you. The next question is from the line of Adnat Taib, an individual investor. Please go ahead.
Hello, good afternoon, sir. Can you hear me?
Yes, Adnat, good afternoon.
Sir, I had two questions. One is that I heard that by FY30 we want to make the contributions from all the three segments equal. However, sir, if you look at the CAGR of last 2 years, order book still bioenergy dominates, and the growth of all the order book segments has been broadly in line with the overall growth. So, if we want to, let's say, increase the share of the other two segments like engineering and high purity, we have to make substantial your increase in the order book number. So, sir, any thought on going ahead with any kind of areas which are not currently in our domain, or let's say substantial increase, how it will come, if you can just throw some light.
So, Arnab, first of all, we have said that we want every segment of our business to grow. It's not that we're saying that everything will be equally split at the end of 6 years. No, what we have said is, between the domestic and international, if you were to take a cut, our aim is to go 50-50. So that is half of our business in 2030 should come from domestic business, and another half will come from international business. So from that perspective, we have split it evenly. But as far as business segments are concerned, we are saying every business must grow to its potential. And we are not limiting anybody to say, oh, you need to be 1/3. There is no such lock on any business. And that's the second one. Third, you mentioned that the engineering and pages business is, obviously they're starting out on a smaller base compared to our bioenergy business. So in that sense, there is a different base on which they are operating. But we, as I mentioned to you, the opportunity is opening up on CBG side, on the ETCA business, on the modularization opportunity of ours. We are clearly seeing a pipeline of our inquiry building very, very healthy. And therefore, we are saying that our businesses, so some businesses in rate, percentage terms may grow faster because they start from a smaller base. But in overall terms, we see bioenergy growing, we see engineering business growing, at the back of modularization, we also see PHS growing, each at their own potential rate that's possible in the market.
Okay, sir. Sir, another question is that, sir, in terms of bioplastics or PLA, sir, when we think revenues will kick in?
No, so as I mentioned to you, we are right now in the process of commissioning our demonstration plant, which would be, so let us, and then obviously we have to invite interested customers. That interest of customers already building up on the PLA side of the equation. And then, so we don't expect any revenue or order book to happen literally this year. But maybe in the following years we will be able to talk about it.
And sir, any sort of...
We have to start creating different molecules out of that plant. So,
sir, any sort of numbers that we are targeting from that segment?
No, as I mentioned to you, we will not be able to give a specific number for that yet. In due course of time, surely we will talk about it.
Okay.
Thank you. The next question is from the line of Dhaval Shah from Infinite. Please go ahead.
Good afternoon, sir. Congratulations on a wonderful performance. While though the environment was challenging, there were equal opportunities. And Reliance, Adani, everyone is announcing big plans in CBG. So how are we positioned to capture that segment? And do we see CBG overtaking bioethanol in terms of revenue mix in our bioenergy segment?
Dhaval, yes. What good news is that large private corporate houses, energy companies are saying that they want to develop this as a segment. So that I think that actually goes to say that there's a definitive potential that is likely to unfold as we travel to this. Obviously, these corporates have very ambitious plans. We are also working with them. We are commissioning projects for them. So we know that I also mentioned at the beginning of the call that we are very, very proud that we now have 3 feedstocks on which we have got absolute benchmark yields established at commercial scale. I made this specific mention because that's been a pain point for the industry so far that, there was always ifs and buts around what works and what does not work. But now we have established this beyond any doubt that on 3 important feedstocks, mainly spent wash, pressed mud and rice straw, we are able to deliver absolutely benchmark performance as far as yields are concerned and on a reliable and consistent basis. This is the second one because people were finding that plants were not running on a continuous basis. So a lot of people have said there are challenges. But that's something that we have solved. So technology-wise we are there. Sachin also mentioned that we are developing further on newer feedstocks because these are not the only feedstock that we work. Maybe in the first slot, this is the most important feedstock, but we already know people are talking of cotton stalk, napier grass, many other second crop residues, so slurries from municipal waste. There are many, many dimensions which are now emerging in terms of poultry litter. So we are now in the process of establishing the correct performance parameters on these alternative feedstocks as well, so that we are able to offer to our customers a wide array of feedstocks on which they can run their plants. We are working very closely with the companies that you mentioned and also some others in the field, and we are very confident that we'll start to see a significant change in the complexion of this business. Whether it go bigger than bioethanol or bioethanol, I think we are not having that race. We are very clear in our head, each business must go to its potential. Whatever is its potential, and if it has to create potential, it has to create new openings. That's what we will drive. So I mentioned that ethanol SAF becomes a big application. In the ethanol-based chemicals become a big application. We will talk about it, diesel blending of alcohol. There are many things that will go as we move forward, will start to change. And all of the feedstock itself will undergo change, in our opinion, once we fully stabilize IOCL plant. And maybe a year down the line, we'll be talking some very different dimensions of the business emerging, both in India and abroad, in terms of what can happen to cellulosic feedstocks. So we are not going to limit ourselves to say one should grow bigger than others. For us, each business should grow to its potential.
Right, but since CBG seems to have more potential and even there is more competition as well, Thermax is also taking big orders. So I was just worried, can we, position ourselves better and, capture the larger pie of the market?
No, we are very focused on CBG. CBG for us is a very, very important business. We are not, I'm reiterating that it's a very important business for us, not only in India, but even outside India. And we will start, as we go through the year, you will hear more about it. The important question to be resolved there was the fact that markets, competition, customers, everybody was worried about reliable yield coming out of the plants, and that's something that we have proven. Right now, at the commercial scale, we are the only proven technology in the country. So absolutely focused on ensuring that we completely go around encashing this potential.
Right. And so just a quick update on the IOC JV.
Sorry to interrupt you, sir. I request you to come back for a follow-up question.
Dhaval, since you asked half the question, maybe we go to the full question.
Thank you. I just asked, what is the update on the IOC JV? Is there any movement on that? Where are we heading there?
Right now, no, in the sense that we are still awaiting the final approval. As soon as we hear that, and it is in the pipeline, so we will hear it soon.
Okay.
Just to add, along with many other news in the month of June. Yeah.
So we are waiting for formal approval for the formation of JV, but we have already started groundwork. What should happen under this JV? What businesses should start shaping up in that? What is required from our side? How the structure should look like? So the groundwork is already happening on that front. Only the formal approval is awaited. After that, we will be in a position to talk about the business plan for the JV in a greater detail.
Great. Good luck for that, and good luck for the future business.
Thank you, Dhaval.
Thank you. The next question is from the line of Shailesh Khani from Centrum Broking. Please go ahead.
Yeah. So just one question with respect to our engineering division and bioenergy HPS. If you can just talk about the tenor of average order book, means by what time we can expect the order book to get converted into revenues for all three segments.
See, average Shailesh is, you can safely consider as 9 months to 12 months for both the businesses. But in engineering business, what Shishir earlier was mentioning, there is a possibility that if some orders are such that the execution time is a little on a longish cycle, so it can go from 12 months to even for that matter 18 months. Because the entire modularization, if we are supposed to do the equipment and the modularization both together, then the timeline can be going beyond 12 months also. But on an average, you can consider between 9 months to 12 months.
Even for the bioenergy segment, because I was under the impression that the bioenergy would be a little bit longer, to 12 to 15 months.
No, it is not. It is not. Beyond 12 months, project will not go. If it is of a very large capacity and if our scope is absolutely like an LSPK, then there is a possibility. But otherwise, it will run in a period of 12 months. Even for that matter, CBG also between 10 months to 12 months is a what I can say a period for execution.
And just a follow-up on CBG, we are doing the whole EPC turnkey projects in the CBG projects, right?
Not necessarily so. It's a customer so demand.
Okay. Otherwise, what will be the addressable market in a CBG project if EPC is not completely done?
Every customer has a different model, right? So they say, some will say, okay, you know what, you just do your technical piece and we'll do the rest. Some will say, no, I'll give you a piece of land and please build everything. Some will say, no, civil will manage, you manage others. So every customer is their own. There are no fixed models for this, unfortunately. What remains common is that the technology piece, the critical part, that is done by us.
So that would be what percentage? If I say what percentage that would be of 100 rupees?
So let's assume if the LSPK project is going to cost us 100, our scope can go from 30 to 100 on a scale of 30 to 100. And additionally, you also need to keep it in mind if it is whether it is placement-based or aggregate-based plant, the solutions which we provide for maintaining the performance of that plant is like a recurring business for us under our services umbrella.
Yeah, that's quite helpful. Thanks a lot, sir. Thanks, sir.
Thank you, Shailesh.
Thank you. The next question is from the line of Rohan Mehta from Ficon Family Office. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Is my voice audible?
Yes.
Okay, great. So I just wanted to get your thoughts on CBG. So how do you compare CBG plants right now versus ethanol when it comes to payback period and the unit economics? How viable are the CBG plants right now?
Sorry, your last portion we were not able to hear because your voice is a little low.
What I was saying is, where do you see the viability in the CBG plants right now? How viable do you think are CBG projects at the moment?
If you are looking from the viability of CBG projects, it is still what I can say to some extent it is work in progress. But projects are viable. They are having IRR ranging from 14% to 18%, depending on what is the feedstock, what is the size, and how they are selling apart from CBG, the solid manure or taking care of liquid manure. So it's a range.
Okay. Got it. That's all from my side. Thank you so much.
Okay. Thank you, Rohan.
Thank you. The next question is from the line of Godwill, an individual investor. Please go ahead.
Thanks for taking my question. Am I audible?
Yes, you are audible, but please be little loud.
Yeah. Sir, I was referring to the latest news report stated that by 2030, around 30 cities in India will go waterless or thing. So we are having an active participation in a water treatment plant. So can you shed some light on our business prospects into this segment, wastewater treatment and other things? Thank you.
So our water treatment is in two parts. One is our PHS business, which is serving ultra high purity water to pharmaceutical segment, and then we have zero liquid discharge system for some targeted industries which have mandate not to discharge any liquid out of their premises, like metals and mining, pharmaceuticals, fertilizers, chemicals. So we offer zero liquid discharge solutions to those organizations.
And sorry, we didn't get your name. Can you please let your name know, please?
Godwin.
Godwin. Okay. Thank you.
And can I ask one more question?
Yeah, please go ahead.
Yeah, and congrats on securing your first order for this blue hydrogen participation. So can you kindly let me know the prospects of this industry and how can we go forward with this particular segment?
So hydrogen, as you know, is going through a transition and transformation both, where traditionally only the grey hydrogen was being produced, and then it goes to blue and green, and then of course there's pink hydrogen as well, depending on what the process of the customer end is. So right now the held belief is that hydrogen is something that will become fuel of the future, but that's on a long-term horizon. And obviously a lot of effort is going on by the leading corporates, oil refineries, oil energy majors, to start cutting down their own CO2 emissions from their operations, and this is a very clear step in that direction. So we will see development happening in this zone as well.
Okay. Thank you, sir. That's for the mind.
Thank you. Ladies and gentlemen, we'll take this as the last question, and I've handed the conference over to the management from Praj Industries Limited for closing comments.
So thanks everyone for your time today. If you have any more questions, please feel free to write us at info@praj.net. I once again thank you for your time and have a nice day.
Thank you. On behalf of Praj Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.